to understand that very importantly. One part of understanding this is using mathematics. You see this large green candle here. 5-day moving average is understanding 5 days worth of trades, isn't it? So at this point here, 1, 2, 3, 4, 5, right? This is the first day, second day, third day, fourth day, and our new open will be the 5th day. So this 5th day will contribute to that moving average. It's a simple moving average. So if this 5th day starts trending below, we open below this particular open, which was about 642.69, 642.29, I think. I got it wrong. Yeah, 69, yeah. Right, so let's say we open below 642.69. This will mean that your 5-day will start plateauing and start to trend down. And these are all higher than this previous high. So the subsequent days, as we continue, this will start trending down and building more liquidity on the way down before it goes up, or we start trending down to converge with the liquidity in the 20-day moving average, and this goes down. So you understand, tomorrow or Monday, once we open at 642.69 and below, this is when the 5-day moving average will start trending down. This may continue to still go up. So you have to pay close attention. 5-day moving average, understanding how it works, understanding the mathematics behind it. So if I have big money liquidity, I understand this, and I understand how all the orders are placed near to 5-day moving average. I will wait for the largest green candle before I start pushing down. And thereafter, you see that we are trapped with all the calls here if this wants to head down. Or this becomes absolutely beautiful liquidity, because let me show you on the 30-minute chart. Look at this liquidity. Can you imagine this happening? Absolutely. After they trapped more shorts that want to do that, and with the 5-day trending down, and you grab a liquidity there. I will show you in a bit how it happens in the 30-minute chart, but you have to understand the mathematics behind this, understanding that the 5-day moving average, now this is a derivative of a derivative, isn't it? It's not just a line. You also understand the gradient of the line and what contributes to the gradient of the line. So that's a 2-factor derivative. So you learn all these in calculus, right? So finally, what you learn in high school has come into fruition. You have applied it to how you make money. So next time you tell your kids, hey kids, I make money because I studied hard in school, you tell them that so that they study hard in school. Anyway, back to this. You understand now. And you see how the market is building liquidity right here. So do remember, if we open above this, 5-day continues to plateau before it trends up. And you want to see upper Bollinger, whether it's trending up as well, because it will trend up. 20-day moving average will start trending up too. And this is what you see from there. So pay very close attention to that. And at this point, you take a look at the 30-minute chart here. Now, 30-minute chart is quite straightforward, isn't it? When you see the market building liquidity here, you want to just remember first where the large dump is, right? The large dump must happen here, where the 20-day moving average trends up to that blue rhythm. The large dump will happen here. So just set alerts to this particular level, 640, and the blue rhythm, the 20-day moving average. And by then you will see 5-day looking to trend down. So just keep in mind this level. If you want a large dump, if you're losing every day trying to call the reversal, just set your alerts here. You'll be absolutely fine. Want to pay close attention to this green, because if we start selling in this green, that just means that the market is building liquidity. Remember my comment about the 5-day, right? You want to see the 5-day trending down and building liquidity like that, and for the market to grab the liquidity firstly from the 5-day moving average, hopefully from the break of the magenta, and up here like that from that green where that previous 3-day worth of liquidity is. That's only if they trapped enough shorts here that they will continue to push up. So just pay close attention to this particular green rhythm. This is really important. If the market wants to grab liquidity, it will be absolutely easy. And an added bonus is if we trade below 5-day, as I mentioned, and reclaimed it back. So do you have an extra confirmation here before this move? Now, otherwise, you have to pay close attention first if we start forming the head, because this blue can still taper within here, and that tapering will take time if it wants to head down. Market wants time to head down, it will, and it can. Taper is still in that yellow and blue rhythm, and in this case you will see 5-day moving average starting to taper together with this blue before it starts heading down. So you have to pay